Hi guys, and welcome back to the channel. This is Alessio Puccio, and today I will be talking about another loss that I took, and it was the ARM stock. And why I'm bringing, you know, all the losses and not the wins. First, because I didn't have win, okay, yet, since when the started all these journey together, when I decided to share everything what I was doing. So no wins. And also because I want to share with you the concept that the setup that leads to a losses is the same of the setup that leads to a win, that is the same of the setup that leads to a break even. So what I'm trying to say and to share with you is that there is no way to avoid a loss. There is no way to avoid all the losses, because actually the losses are what make your equity curve grow, you know, in time, with time. And so today I want to bring to this channel another loss, because I want to explain again the setup. And the setup is always the same, but being always the same, the setup, you will realize how it's different from what you see outside, from what you see from other, let's say, internet gurus. They always think, they always, sorry, bring you something different, something new, some, weird setup. But the reality, it's that actually what works, it's repeating the same setup, because the same setup is what leads you to a loss, to a break even, or to a win. Okay, big win, small loss, break even, small win, loss, big wins. It's always the same. And so, like we did in the previous video, sorry, where I uh, break down another trade that it's not here because I don't remember why I decided to. Yeah, it was not. It was not a right setup because of the data. I didn't have the data in real time, so I decided to eliminate from the spreadsheet. And as we did in that video, we were going, to do another breakdown together. And to do the breakdown, I just don't want to go on Trading View, but I want to go on the spreadsheet, because I think it's way simpler. So here we have the entry, and here we can see everything basically. So I just don't want to go, you know, taking the price action back, going replay, because I think it's a waste of time. You can see everything here, and I think that is enough. Okay, so basically the trend was going. Okay, actually something that we can do. Okay, just yeah, I just want to mirror it's a software where you can do a lot of things, but I really don't know if the password is correct. Yeah, and let's see. Okay, perfect. What I want to do is that I'm gonna show you. I'm gonna bring this here, perfect, and we can, write on. So if we need something, it's killed, because it's, as you can see, we can zoom. We don't lose resolution, so it's very nice. And we have a pen. I just want this one. Let's say perfect. Oh, where is? Okay, perfect. Okay, so here, this is the context, and what we have is just price that made an accumulation. Okay, and then we can start counting the MBs. So the, let's say, um, reaccumulation. So we have one, we have two, okay, we have three, we have four, and then we have a reset. This is a reset. This is this is a distribution with the purpose of reaccumulation. I talk about this concept in, if I don't wrong, in the last video or the previous one, I don't remember. I already talked about this concept where we are in a distribution, so price on a lower time frame broke the structure, but with the purpose of a reaccumulation. Okay, so right now we are starting again the count, because here we have the accumulation, and now we have price that is, in a stage two. So it's delivering. So it's in a markup. Okay, just relating to the Wyckoff concepts. In the validation time frame, we have, I consider this one all an accumulation. Then we have one, two, and this is the third. Okay, so we have the third pullback. The pullback is, pausing on the 10 EMA, so it's perfect for me. And not only the pullback is clean, we have two candles pausing on the rising 10 EMA. So for me, this is very clean, and I want to take this trade. Okay, so this is what we see from an sorry. Okay, from any time frame perspective. So clean pullback to the 50. Okay, so the most important thing is that price, break the 20, or at least touches the 20. Okay, and then we have the build up of the to break the double MB, and this is my buy stop. Okay, so if we go on a lower time frame, I do not have access to the seconds, so this is 3 minutes. I can go on, for example, 10 seconds, just to show you that here we have a Wyckoff. Okay, we always have a Wyckoff in these kind of setups. So I was willing, to risk and to buy stop these price action, because as you can see, the 10 and 20 were rising, so it means that they were sustaining the price. And all what we said before, stage two, clean pullback, big impulse, this is a setup that I would consider a good setup. So I'm willing to put money on it, to put risk on it. Unfortunately, this, ended up being a don't remember. I don't remember, a break even or a loss. This is a loss. Oops. And I just want to open this one. Okay. Let's do the same thing. Perfect. Okay. Perfect. So this is perfect. Okay. And as you can see, price, tapped me in. Perfect. Tapped me in there and then collapsed. But this kind of setup, why I'm showing you this, because I want to show you another trade that I took a break even, and I want to show another trade that didn't give me the entry but ended up making really a huge RR. So I just want to show you, breaking down this trade that was a loss. And I do it on purpose because I want to bring you the losses, because I don't want you to be scared by losses, because losses are your business expenses. In trading, losses are like business expenses. You have to think about losses like that. So I'm willing to bring to the channel my losses, because I don't want you to be scared by losses, because losses are normal. Losses are part of the game, an important part of the game. But bringing you these losses and bringing you a break even and bringing you another setup that ended up, giving a huge error, even if I wasn't able to get position behind it, I want to show you that the setup is always the same. There are, tiny differences between setups, but at the end of the day, the concept is the same. And this is the most important concept of today's video. The setup, it's always the same. So you have to be willing to take the setup, even if you don't know the outcome, even if it could be a loss, because what could be a loss could be also a big win or a break even. So if the setup is the same, you have to be willing to take the setup, because that could lead, to a big winner, the big winner that you was waiting for. And another reason why I'm showing you this, and I started the video with my sheet, is because I want to show you that the last trade were basically 2 losses and 3 or 4 break evens. I really don't remember. 1, 2, 3. Yes, 3 break even and 2 losses. There is not something exceptional. I'm not showing you a 1 to 21 RR win. I'm not showing you something crazy, 1 to 100. I'm not showing you basically anything. I'm showing you losses, because losses are part of the system. And this is why I want you, to pay attention to what I'm saying, because what I'm saying, it's totally different from, what you can hear on other video or on other environments on YouTube. Everyone, is bringing you the wins. I don't want you to focus on the wins, but I want you to focus on the losses. This is the most important thing. Okay. So, where it is. Okay. So, this was the setup. As you can see, we have a double break. The same over here. It's the same setup. So the double break, price stop mean, and then went down. Okay. Now, what happened? Okay. I want to leave this one here because I want to show you the other trade, and I want to show you the setup is the same. So, just a minute. Okay, I'm trying to make it as clean as possible. Oh, damn. Okay, perfect. Okay, perfect. Now, this was the break-even from yesterday. Okay, so I just want to do something like that. I want to be as precise as possible because I really love this software. And here you can see, oh, I'm sorry, guys. Perfect. Because I'm just switching from mouse to trackpad, and sometimes, it doesn't work. So, again, we had a bunch of reaccumulation, accumulation, cycle, reaccumulation. Okay, so distribution with the purpose of reaccumulation, and then a big bump. This, was because of earnings. So it really doesn't matter why something happens. The most important thing is that the setup and environment is the same. So as you can see here, it's the same. A big impulse, a pause. As you can see, this is a clean pause as the other one. And now here we have the same thing. Okay, this is maybe a little bit less clear than the other one, because we have this prior pullback that, let's say, didn't work out, and then we have this one that is a bigger one. So this is a little bit different because we have this one, but at the end of the day, the setup is the same, because we are waiting for a displacement. We are waiting for price to break some sort of structure in the lower time frame to recreate the distribution pattern with the purpose of reaccumulation. And then we have 2 breaks, 2 perfect breaks. And as you can see here, you have the 10 and 20 pointing upwards, a perfect pause on them as the second break, and then the buy stop. So the setup is the same. And if we want to compare the two, Okay, sorry guys, I'm not really an expert in doing this live, but I hope you appreciate. Okay, if we compare, as you can see, the setup is the same. This is a little bit small, but it's above the EMA. The EMA are rising. Here we have clear stage two. Here we have a clear stage two. This is a big impulse and a pause. This is a big impulse and a pause. As you can see here, we have a small pullback that delivered or didn't deliver. It depends on how you uh, let's say it depends on how you see it. Okay, these is a smaller setup, and these is a bigger setup. At the end of the day, it's the same. This setup is the same. The context is the same. Okay, this one was a loss. This one was a break even, and I want to share with you the break even. Just going there and okay, perfect. Another one. Perfect. And so this one is the break-even, guys. And as you can see, it's the same. Okay? Price stop me in. Go for a almost 1-to-1. Okay? I just moved to break-even and then price came back and took me out. Again, the same setup, but different outcome. So if I'm willing to take my winner, I have to be willing to take a potential loss and a potential break even. So the setup must be always the same. Okay? Almost always the same. The concept behind the setup must be always the same. Then the setup can change a little bit because price action is never the same every single time. Okay? But the concept behind the setup, behind the strategy, behind the system must be the same. And as you can see, the previous one was a loss. This one is a break even. And I want to show you another thing, guys, and this will blow your mind. We can, get rid of all this thing, but no, yeah. I just want to show you another thing. Um, where it is, where it is, where it is, where it is. Okay, this one. Where it is? Yes. So this, I'm gonna make a screenshot and I want to put it here. So let's get rid of this one and let's do something like that. Okay, so if you want to screenshot everything you can, and it's way, way, way simpler this way. Okay, if we go here, perfect. This was the price action. We were there. Okay, we were there. These, if I don't wrong, yeah, this was the pullback that I wanted to trade. As you can see, big impulse accumulation. 1, 2. So big impulse. Okay, clean setup. As you can see, this is as clean as the others. Okay, as you can see, clean pullback, clean pullback. The setup is always the same. Clean pullback, and this pullback was actually this one. If I don't wrong, yes, this one. And I want to show you that the same setup, you know, would have lead to a massive winner without changing anything. So this is very important because at the end of the day, the purpose of this video is to show you that, I'm sorry if I'm repeating myself, but the setup must be the same. This is the key. Consistency, sorry, in taking setups. This is key. And unfortunately, I wasn't able to have the second pose here close to the EMA, but I had this one. But this one, for me personally, it's too far away. It's, let's say, overextended. Even if it's perfectly valid, for me, it's overextended. Okay, so I wanted the pose. This was the first pose. This, let's say, the second pose, or this one. Unfortunately, I wasn't able to have my setup. Okay, because if we, you know, this is another thing. This is just a little bit, higher as a pose, but as you can see, we have a green, sorry, red candle posing perfectly on the EMAs, and another green one recovering immediately after that one. So this for me is a clear pose on a rising 10 and 20 EMA. So for me, this is still valid. But as you can see, this one is really close to the EMA. And I was waiting for something like that here, but I didn't have. And why I didn't take this setup? Because if you see, this setup is completely different. If I had a red candle, okay, posing perfectly on the, let's say, rising 10 or 20, better the 20, and then another candle, okay, just like this one, that would have been a good setup for me. But unfortunately, this red candle was really, really small, and I don't like to enter when I see a small candle, because what I noticed is that the majority of time price, tap me in and then comes back, because we are too far away from the EMA. Remember that EMA is an average of the price. So when it's too far away, price tends to come back. So this is why I love to take setups when the double MB, the double break, it's really close to the EMA. Okay, it's the accumulation. I don't like to trade, let's say, the reaccumulation. This is a reaccumulation, okay, in another time frame, okay. But I don't want to complicate things. So the fractality and all, those concepts and things maybe will be the main topic for another video. What I want to show you right now is that the setup is the same. Unfortunately, I didn't have the opportunity to take this setup, but if I had it, boom. If I had added, sorry, my English is not perfect, sorry guys, this would have been perfect. Really, really perfect. As you can see, again, the setup is the same, the concept is the same, but the outcome is different. So you have to be willing to take a loss or a break even in order to let your equity curve, grow with the winner, because this is the same setup. Obviously, and I want to be crystal clear about that, the price section is a little bit different, okay? Because as you can see, this pullback is not exactly like this one. For example, this one is, as you can see, below the 20. This one is at the 20. This one is to the 50. Why that? Because this was a pullback to the 10. This was a pullback, let's say, in between the 5 and the 10. This was a pullback to the 5. So obviously, when you have a pullback to the 5, usually you have the E time frame touching the 20. When you have a pullback, as you can see, in between the 5 and 10, then it depends also on the price action on the inputs prior to the pause. But on average, when we have a pullback in between the 5 and the 10, we have, the price in the E breaking the 20 and, staying in between the 20 and the 50. When we have the price pausing on the 10 in the validation time frame, we have the price touching usually the 50 EMA in the entry time frame. So as you can see, the price action is not the same because we have different types, okay, of MB and of pauses. But the overall concept is always the same. The type of entry is always the same, okay? One was a loss, one was a break-even, one was an insane winner, an insane runner that unfortunately we wasn't able to take, okay? But this is part of the game. This is part of the game. So this is why, okay, and I hope you liked this, because this is something that I want to do. What is that? Okay, it's something that I want to do in every single video, because I really like Miro. It lets me um, explain my concept with the drawings. Okay, so this is why I started the video with this screen with my spreadsheet, because as you can see, since we started this journey together, I just recorded only break-even and losses. Only break-even and losses. Does it mean that my strategy doesn't work? Not at all. It only means that in this specific time, the trade that I took didn't deliver. As simple as that. Then now we have only one type of setup. Then when you become profitable, you can add other weapon, and maybe you can add another setup that you back tested and is profitable. So you can have different kind of setups, but you have to have clusters, okay, of setups. So these one are always the same. The other one are always the same. The other one are always the same. So maybe you have three different types of entry, but those three different types, when we are talking about one specific type, they are all the same. When we are talking about another specific type of entry, they are all the same. And this is how you reach profitability, and how you manage to be consistent in your trading. So waiting, because 95% of the time of a trader is spent waiting, doing nothing. So you have to be willing to do nothing, because actually you're not doing nothing. You're actually avoiding losses. Okay? You're waiting for the perfect setup. So you have to be willing to do nothing, and you have to be willing to take always the same setup. Okay, so I hope that this video that started with the breakdown of the AM trade of the losses, and then I had the GTX that was a break even, and CC that was a trade that unfortunately didn't take. I hope that this mix of trades made you understand that the most important thing is to be willing to take the setup as it is, always the same, to become profitable. Okay, so if it's clear, please consider not to subscribe. I remember, I just want to say it again, and remember every one of you that I don't care if you subscribe, but if you follow me on the channel, you will see these things in real time, because I didn't show this time, but I want to do right now. You can see that everything is shared in real time here. As you can see, this is the break even, this is the losses, everything is in real time. This was the CC. Okay, I was what it is. Okay, yeah, this was one, and this was the it's the same now. This, okay, yes, this is GTX that after this candle gave me the full red candle and the full green candle, and this is CC. So as you can see, I'm sharing what I see. I'm sharing what I'm willing to focus my attention on. And unfortunately, this time this didn't deliver. But if it delivered, yeah, the equity curve would have been different. Okay, so yes, this is important. Subscribe here, okay? It's free. You can see in real time how a trader think, not a marketer, a trader. This is a trader. Someone's showing you only winners, 80% win rate, an average of risk to reward of 1 to 20, 1 to 30. It's not a trader. It's a marketer, and this will be the topic of another video. But this is important. So if you want to follow the journey, if you want to understand what are the real steps to become profitable, what is the day in the life of a trader, just consider subscribing to the Telegram channel, because there is where the live action is. Okay? Thank you again, and we're going to see in the next video, as always.